Hi there, Serial Trader here. Let's check in with the major US indices, and also I'll have a little information on Amazon near the end. Okay, so here's the hourly chart of the S&P 500. Still have this, as I've currently labeled it, B-wave top in place. And we initially started having a good move down, and you can see we were to draw a channel, just connecting these two lows, and then parallel off the initial high. We had a nice ABC up for B. Then we started coming down, actually broke out of the channel, looked like we were consolidating, but then we had a nice pump closer towards the end of the day and closed up fairly strongly. Now I'm not necessarily embracing that this initial leg down was the pullback and now we're going up in a new trend. I'll be essentially forced to embrace that if we can break out above this double top that we have in place, but we haven't done that yet. And actually now maybe we're gonna use the middle of this channel, this dotted line, maybe that'll act as resistance and we'll start coming back down again in what I'm still anticipating will be just a final leg down for some sort of C wave to complete this overall corrective structure. But I won't necessarily hold my breath, and I'll get to that in a moment on the other charts. But still, at this point, favoring this interpretation. Obviously, if we break the highs, that means we're going up in another wave. But let me just pull back here to the candlestick chart. So here's SPX daily. Now this isn't actually a candlestick buy signal, even though it was a strong day. It's not an actual engulfing pattern or anything like that. Just a strong day that closed near the highs of the day. That's all you can say about it. But we didn't take out that double top, just like I was showing the other chart. So until we do, stay cautious for any longs. But that being said, let's go to the Dow. So the Dow Jones, same idea. Pretty strong day, at least from where it opened. And intraday, it was really getting down there, looking like it was going to break down, and then had that surge up and close near the highs. But really, we only closed all within the first quarter of this initial bearish engulfing candle. So in order to actually invalidate this bearish engulfing candle, you have to take out the high of that candle, and we haven't done that here. So that would certainly be a good long entry by the breakout of this resistance area, and but I would recommend waiting for that to actually happen before you do that, because there is still potential for weakness here. Okay, that's the Dow. So let's go with the NASDAQ composite, and this is what really has my attention, and this it's difficult to reconcile with the other two indices, because the NASDAQ composite has a nice bullish engulfing candlestick, legitimate, and it engulfs 1, 2, 3, 4, 5, 6 prior candles real bodies. So that's an extremely strong signal, which really favors more upside in the NASDAQ. And if there's more upside in the NASDAQ here immediately, it's pretty difficult to see that happening without more upside on the other two indices, particularly the S&P, because the S&P is quite a heavy tech weighting. Maybe the Dow not so much, although there is definitely some tech in it still. So there's that on the NASDAQ. So yeah, I'm just not seeing a high confidence trade as far as the indices go, because this indice really stands out from the other two. But certainly, if we start breaking above resistance in all three indices, that's going to be a good buy signal. And definitely watching this NASDAQ carefully. Okay, now what I wanted to touch on, well, actually, we'll just do VIX first. So VIX, again, VIX tried to have a little spike up today, but just another lower high on VIX. And then we closed right near the lows of the day on VIX. So really nothing concerning here. And okay, we're in the 12 and change category on VIX here. That's pretty low. That's definitely not what you'd see if we were approaching some sort of massive drop. You'd see that starting to spike up more. And in this benign state, VIX is really just in a bullish signal for equity strength. Okay, now what I was actually going to get to here, Amazon. So here we have Amazon, and Amazon, okay, we've been having this nice, healthy sideways kind of consolidation after that all-time high, which I believe was right after earnings there. And then we just had this drifting along sideways, not threatening at all. Lots of doji style days, and just hugging that T line. The T line's going sideways, and now let me just really get in close here. We've had a bullish engulfing candlestick, close above the T line, engulfing, and just like the NASDAQ, 1, 2, 3, 4, 5, 6 prior real bodies, okay? Very impressive. So, the reason it's called the T line is it's the trigger line, okay? And now we have a bullish candlestick buy signal, and a close above the trigger line, and relative volume is actually a little higher than it has been for 6 prior trading sessions, okay? Or 5 prior trading sessions. So there's that. So this looks really good for continued strength in Amazon and likely a break of this all-time high. And we see our stochastics, they didn't get oversold, but now starting to curl back up. So that's just kind of a confirmation of that indicator. So what I did, I bought some Amazon 1580 strike September calls. So I'm obviously looking for upside in Amazon here. So again, the bullish engulfing implies the next 3 to 5 candlesticks will be in that direction. So that was good enough for me, along with all these other things, to buy some reasonably long dated Amazon calls. So we'll keep an eye on how that trade plays out. But from a candlestick perspective, this is just idealistic almost. All right, that should be good for today, and we'll check in as needed throughout the week here. Serial Trader signing off.